Hey guys, Mike here. So, oh boy, what another interesting day in the market, and we definitely got some economic news that hit this morning, which was kind of a surprise after you saw yesterday's inflation data. And so we'll get into that. It was actually, I guess, good news in a way, just kind of mixed up. But also, I mean, there was other stuff that come out which is just really surprising, which I'm going to show you. Plus, we'll look into Tesla because they got more bad news come out. And there, that chart right there, when we look at it, it is sitting on something very critical. Two things, and if that breaks, some of you gonna get your wish, because I know some of you have been wanting to buy between certain price points, and I think you're gonna get your wish if this happens. Plus, something you're seeing happening a lot, and it's a really good example. That's why I just want to bring it up to kind of help some people out and everything. Because there's, everybody, oh, I missed this rally, oh, I missed this stock win, I missed my entry point, all this other stuff. Remember, guys, the market's a rubber band. Like, if those stocks you love at certain price points, they may not come down to that exact one, but they'll come back, and I'll show you what I'm talking about, which is really key here. Now, looking at more inflation data that came out, and the Fed likes to look at this stuff as well, it was PPI, right? So headline CPI was higher than it was expected to be, but PPI came in lower than expected to be, actually. And you end up seeing the month over month was actually negative 0.1% versus 0.1% estimated. And then core was 0% versus 0.2% estimated. You can see by those charts, been looking really good, right, lately. And when you look at the headline PPI, you're talking about 1% year over year versus 1.3% estimated, and then core came in at 1.8 versus 2%. So really not even close. And when you look at it on a global scale, understand it's not just here. This takes into account, this is the Bloomberg Global Inflation Index, just many different countries. And you can see we're finally entering that zone right there between 0 and it looked like about 3-point-something%. And so now we've finally came back down in that zone, and so it's happening all over the globe. And it's amazing when you open up supply chains, right? When you shut down your supply chains and try to reopen them, it is a hot mess, okay? And so that's what a lot of this is. And so now we get to see, because what are you seeing going up now? I think like almost half the inflation data or whatever it was, some crazy amount, was just from like housing and stuff. And that right there, and this is where the Fed, we got to figure out where they're going. That, of course, is delayed data, and it's so inaccurate, so inaccurate. You know how they gather that data? It is so freaking inaccurate, and it really pisses me off because there's companies out there that do that for a living. They could give them up-to-date data just like that, and it would be better than the data they're getting, okay? And so it drives me nuts. But, I just keep digging into this because it's real curious, and it was surprising. The Fed funds tracker, the cuts went up again. Look at this. Now it went from 69% yesterday to almost 75% believe there's going to be a cut starting in March. But if you look even more detail, they have a cut scheduled for every single Fed's fund meeting. Right here in March, you see it's actually 74% now, as I just showed you. 66% on May, June 59%, you just follow it on down. So they have a cut for every single meeting priced in right there. That's mind-blowing. And I'm going to talk about something in tomorrow's video, how the 2-year and the Fed funds rate kind of go together, and how the Fed funds rate or the 2-year, whichever one tracks the other. But it's with a delay, so I'll go into that more tomorrow. But that's what the market is still, I guess, pricing at this point in time. And maybe that explains why you see sentiment right here, right? Where it's going to be 6 months from now, and you still see the bulls hanging in there. The bears have barely increased. The middle is kind of like, whatever. We don't know what's happening, but that's still a high number. And it's just crazy. You would think with unemployment where it's at, with headline CPI where it's at, they would just start cutting down like that. But again, that's why I do a members video every month on recession watch and different things, stuff like that. And what we talked about, the industrial and all that stuff is a mess. That data is hot garbage, okay? It's still in contraction for the most part. And so that could be what they're looking at, right? Again, it's an election year. I mean, maybe wink, wink, they do something, try to stabilize the economy or whatever. But again, you still have two different economies going on, and we know it. Right, I mean, I just went to a place, small town, hardworking blue collar type town, and I'm a weirdo because I have this channel, and so when I talk to people, I'm not really just asking about their kids and dogs. I start asking weird questions. Some people find it weird when I say, "How's it going up here with the economy?" That's something people ask, but I gather that information because I want to know, right? Because I have this channel. If I didn't have this channel, I wouldn't ask those questions. but I do. And then I bring it back and give it to you guys. And in most blue collar towns, they are not happy. Okay, they are not happy. It's two different economies, right? That's why you see in the small towns, the pawn shops, they're loving business right now, because in pawn shops, I didn't know this till about 4 months ago when I told you guys about it. I didn't know people took out loans in pawn shops. I had no clue. I don't go to pawn shops, right? But they're bringing in all kinds of stuff to put up as collateral, and business is still booming for them, okay? And then you got the people with the appreciating assets. They're loving life. Inflation made, us a lot more money, unfortunately, right? And we can deal with the higher prices at the grocery stores a little better and things like that. And so, but we'll see what the Fed's going to do. We'll keep tracking it. Now, the one thing, before I even get into some important charts, is this right here. You're seeing this all over right now. And it's like, for example, Enphase. You're seeing a lot of stocks do what? They're coming back. Enphase is one of the ones I missed. It was a regret I had, and it was really just a trade. I wouldn't do this for long term. But I was blank for a tick, and it starts with a D as the word, right? And I thought it was going to come to right here, and I was just waiting on it right there, and it just took off on me, right? I thought it was going to come in that fair value gap bounce. It did not. And when it bounced, it rocketed very quickly, 46%, 14 days. But look at what is happening, right? You're seeing this on hundreds of stocks right now. That thing has come down 22% in a very short amount of time, right? What is the saying? The stairs up and the elevator down. And now it's coming to fill that gap. There's another daily fair value gap around it. If I put in the moving averages, sitting right there, the 50 right below it, okay? And so, again, you're seeing this. So I'm just showing you this. When you miss something, you say, oh, my God, I missed it. It's just gone. You got to let it go. Don't chase, right? When you chase, that's when you usually get burned, okay? And another one, prime example right here, I hear this a lot from you guys, coin. Like, I know a lot of people are chasing this thing up. And, of course, when the halving happens and Bitcoin runs, if that's what's going to happen with all these Bitcoin ETFs now, which I'll talk about tomorrow in the Saturday video, again, it's going to come back down. It always does. Like, do not chase. And the one indicator, I use two for the members, is this right here to give it to you, and this is a free one. And guys, real quick before we continue, I'll ask you hit that like button in the bottom. It helps people find the video and stuff. And if you like the content, think about subscribing. And it's this right here, and I put it in the morning news brief Monday through Friday for a reason. I track two of them, and it's literally the Fear and Greed Index. It's free. But when you see it, especially both of them going to extreme greed, it's just saying, it's like a stop sign, a red flashing light saying caution, caution, caution. And that was on the 23rd, right? And if you go back to the Enphase chart, it started selling off on the 26th. That's when most of them started selling off. And so when you get up there, it's no different than when it gets down below like 14, when it gets in fear. But with both of them getting extreme fear, that is your time to buy. You are not going to catch the bottom, but you're going to be very close to it. Okay, and it may take a while to move back up. But that's when you want to be opening new positions. I'm not saying you can't do it in the middle, but when you go to extreme greed, man, and these stocks are just stretched to the hill way above their moving averages and all that stuff, it's going to come back down, and you're going to get your spot, right? So that's why I've said for weeks, have your entries ready, have your money ready to go, and then do your thing and carry out your plan. Don't let anybody sway you any other different way. Well, the fear or anything. Like if people out there trying to pump it, anything else, hey, buy it up here at the top. Like, don't do that. Like, seriously, just don't do it. Not financial advice, but do what you want to do. But those are free indicators. You can go online and look those up and go, ooh, we're in extreme fear. Okay, cool. Keep it on your phone. And again, it's just that red light saying caution, caution, caution right here. And so, because that's when it gets extreme fear, that's when the big money starts to dump, right? And retail's FOMOing in. That's what's happening. That's why you can stay in extreme greed. And I've said it 1,000 times. You can stay in extreme greed for quite a while, right? That top extreme fear and greed index I use is actually what it measured is what percentage of stocks are in an uptrend and above their 6-month moving average. Okay, so that's a big difference on that one versus the CNN one. So anyway, now as far as some stocks here, always look at the ones that are green on red days and things like that. You still have Google right here. It was green on the day. Certain key things though, right? Moving averages look fine. 50s crossing the 100, all that good stuff. Charts looking pretty good here. Obviously higher highs, higher lows. We always love to see that. Watch out for, some bearish divergence going on, forming on that RSI right there. Momentum slowing down, everything. Why? Because we're coming into a big OPEX next week, which we'll talk more about in Sunday's video. And again, you see it right there. Doesn't mean it's going to play out. Doesn't mean it always has to play out, okay? And when we pull out on the weekly, you can see, if it can just get above that 143-ish area, retest, right there is all-time highs. There's that one little area, okay? And unlike Amazon, you would think it won't be that brutal to get through, but if it can just do that, and the good thing is, look at the RSI down there. this whole move up. The RSI has been trailing down, right? And Google's been trailing up. Look what happened on the last run, though. That's a healthy RSI, even though it got overbought. It's going up, like it's heading with it. And so it's going to be interesting to see how this one plays out over the next like 2 to 3 weeks here. Then you got Microsoft, which shortly today overtook Apple as the most valued company in the world. And I think it deserves it, by the way. I think it needs to be number one. And, you know, when you look at that, new all-time high again. Big green candle for the day. It was looking very nicely. But what's healthy about this one, it tested its 50, right? It came down and tested that all-time high level where the 50 coincided, and it bounced. Okay, so this one is not one of those ones where you're like, and the other difference is their earnings. They actually have growth in the cloud and things like that. They have new products that have lots of growth and stuff. And so when you look at that, to me, that's way healthier than Apple. I'm not saying it's not overvalued right now. I'm just saying when you compare it to Apple, it's like there's way more bullets in the chamber, so to speak, or however you want to put it, for this company versus Apple. And so I think it deserves to be number one. And when you look at the chart, yeah, I mean, I don't want to be buying up here. Don't get me wrong. But at least you got a retest. At least you had a pullback on this thing. But when you're number one, that means the big pension funds, things like that are piling into it. So it's hard to push this down 30, 40% unless we're going into an actual recession versus like an Enphase, a Coin, and all these other stocks that can go down 30% in less than a week, right? And then when you look at Meta, I mean, this thing was up nice today, right? This is another one. It came back. It tested its 50. I showed you the chart the other day. It was a healthy move up for this thing, believe it or not. RSI is looking fine, and right there is all-time highs. I mean, right there is all-time highs. It's less than, I think, 2% away now, and we kind of pull out, you can see what I'm talking about. Now, when you look at the daily on the RSI here, everything's looking fine. When you look at the weekly, obviously, there's definitely bearish divergence. But right there, I mean, 2%. So they're going to sell it off before they get there, or we're going to get a double top to play on this one as well, like you saw with Apple when it hit all-time highs and then started selling back down. You would think you would get a sell back down, right? That's usually a normal reaction. And so we'll see what happens on that. Let me know if the comments, if you've been in Meta on this ride up. Now, Tesla, very important here. Came down to that trend line, which we talked about yesterday right there, that ascending trend line, and was cool on the 1 minute here. I mean, this thing hit that trend line to the penny. I did not move this from yesterday's video, and it's always cool when that happens. It's just amazing to me to see it. Came back down into that, daily fair value gap. There it is. And then, I mean, not much, like basically no momentum of this thing. It bounced, and it comes back down, bounces again, and then just trails on it, right, for the rest of the day. And so you don't see any kind of call volume, call sweeps coming in on this thing. It's below that 200, which we talked about. Once it dropped, we were going down to those gaps. That's where we're at. You got the bounce on the daily fair value gap, which is what you want to see. But the big question is, and this is the big one, when you pan out to the weekly and we pull up the 200 weekly moving average, look where it's sitting, right on it. And if that breaks, as we pan out, you can see it's broke it multiple times even on the way up right here. You can see it can have much more downside. Okay, so that's the key. And if that one breaks, then we got to start actually looking at obviously levels and stuff, like where can we go to, all this good stuff. And so immediately you're going to go to 205 and look at that one for sure. Between 185 190 is going to be another level if it doesn't hold. And the truth is, I mean, what I'm expecting here won't surprise me a bit, and you can kind of see levels there, is this is when you usually see them pile on and start heading into downgrades, right? Start downgrade. I'm surprised I hadn't seen them downgrades come out, because you get news like this, Hertz sells 20,000 EVs, and I believe this is yesterday, and I totally forgot to put this in yesterday's video, so thank one of the viewers for reminding me of this. And then, of course, what they do, they cut prices in China again because of worry on demand. And as I always say, look, and people hate to hear about Southern Discord today too, is, I trade it, I own it, but understand, if 85% of your revenue comes from cars, guess what? You're a car company. You may have great technology. They are light years ahead of their competition. But understand, EV adoption in America, I've been saying for years, is tough. It's going to continue to be tough. The Chinese, man, I mean, that's where they get a lot of the revenue, is a mess. I mean, I even read an article the other day that's saying even the Chinese investors, they're actually investing their money now into the Japan stock market, not the China stock market, right? And so, and again, they have a lot of their wealth tied up in the real estate market area, which is a hot mess. They can't get it out, right? And so that's a tough thing. That's just what it is, and that doesn't mean Tesla's not going to come back, because, again, it's been called dead how many times, right? And now it's in that trend line, so that 200 moving average. It's broke the weekly multiple times, but what you're looking for is the call sweeps. As soon as the call sweeps start rolling in, maybe people get tired of buying NVIDIA for a second, and they start rolling into Tesla. And it's not just buying it, by the way. It's also people selling puts. I told you yesterday people were selling 210, 205. I know people are selling 200, 195 a day because it's a lot of premium. Remember, the more it drops, the more premium you get for those puts. And so, I mean, I'm not going to shake, and say no to $600, $700. Because I think it was the February 19th, it was the most popular people were selling. And if it does get called, obviously that premium goes towards purchasing stock for them, so they'll get in at lower prices as well. And so that's just the way Tesla is right now. And it's always going to be that way until the premiums aren't any good anymore. All right. And it'll get replaced with something else. This always happens. But until that happens, just watch out for that and everything. So anyway, I hope you guys got some out of it. I do have Saturday's video come out tomorrow, and I'm going to put some in there. It blew my mind, so I put it in there for you guys. I found it on a podcast I listened to, and I think it's going to blow your mind as well, because a lot of people are saying, oh my God, we're so over price, which, by the way, you're right. I mean, this is, as far as the value of the stock market right now, it's crazy, but it's not just happening here. So I want to show you something tomorrow to show you that, and it's mind-boggling. So, and then Sunday I'll do probably a setup for the week. I maybe do it Sunday or Monday, because remember, it's 3-day weekend. Markets are closed on Monday, so please enjoy your 3-day weekend. Hopefully you have better weather than we do here, as we have rain right now. It sucks, but hopefully we get some sun and everything. So anyway, hit the like and subscribe button, guys. I really appreciate all your support, watching the videos and sharing them with people. I really do appreciate every one of you. Hit me up in the comments if you're a new viewer, and tell me how long have you been watching the channel. I'm just curious. I just want to know. So anyway, have a good one, guys. I'll see you later.